Hi traders, welcome to Elite Currency. My name is Chris, and thanks for joining this free webinar. We're going to take a look at some interesting concepts that I think will be valuable for improving your trading, concepts that we use on a daily basis with SWAT, which is our method, and also in ECS Live when we send our trade setups. All right, so let me show you the agenda actually right away. I might not see your questions immediately, so I'll just take a pause, check the other screen, and then see if there are any questions. So just be patient with me if I don't respond right away. I hope you can actually hear me properly. Let me double check that just in case. So do you see everything as it should? Is everything working? Fine. All right. Perfect. Great. Thank you so much. Perfect. So we can move on. So let me show you what it's all about. So we want to talk about these core concepts of SWAT, but I just want to give me about 5 minutes. I want to talk a little bit about Elite Currency, our plans, our development with Live, offer you a nice discount, and then I want to talk about some packs, a few simple tricks actually, one by one, about 6 in total, I think, and then there's a free indicator at the very end for those that are interested. All right, so this is what we're gonna be focused on today. So let's start a little bit because this is a webinar that's free for everyone, not only our current followers or our current members, but anyone who actually found out. So for those that are maybe joining us for the very, very first time, very quick introduction to what is Elite Currency. We started 2014, Annette and I wanted a website that could reach out and show what we thought about the markets, our analysis, and basically we like to do things pre-fact. We want to show the analysis before it happens. Sometimes we show, okay, this is what we said beforehand, and look what happened afterwards. But that's just for learning experiences. We like to be consistent in the market every day, so you can see how we think step by step. We want to be like transparent in that regard, and we want to, want you to see us as a reliable partner in education and trading systems and analysis. All right, so that's why eventually we expanded our website. Besides free analysis and material, we also showing our systems. That's something that traders were interested in, and most recently we started a new program which is called ECS Traders Club, and I'll dive into that a little bit later on. A bit about me very quickly. Been trading the markets for 10 years. I'm mostly on Forex. I do analyze a little bit CFD, stock indices, a little bit of cryptos, but really my favorite is the Forex market. I do kind of analyze commodities as well, by the way, but trading-wise, it's all about Forex for me at least. And here's a little bit of a background about myself, and maybe you have some common interests, so let me know. That's a little bit of a background with myself. Now, regarding Elite Currency, the last year, things have expanded. Traders were interested in our methods, so we made this course, the SWAT course. Then it made this CAMACD course. We kicked off with Live, which is very much appreciated by traders. Luckily, we're happy with that, and a lot of info is sent through the Telegram channel and our forum. I'll show you a little bit later. We do have also some new plans for this year. SWAT, maybe MT5, expanding our trading team, expanding our free education, all right, improving Live because we would like to send more setups, and maybe even looking into crypto. So we have quite a few ambitious ideas here. I'm not sure if we're going to all make all of them in this year, but let's see. It would be nice. By the way, as a quick note, we are looking actually for, at this moment already, anyone who likes to write about trading, about analysis, about Forex. So if you're interested, feel free to write us and say, hey, I would like to be one of these. So you can reach us at info@elitecurrency.com. As a quick side note, I thought might be interesting for you to know that. So please reach out to us if you feel that this is something for you. So a quick minute or two about ECS Live. We started in October. Just wanted to give you a bit of update how that is going. So we're now in month number 7, I think. Really, time is flying. We got about 14 trades per week. Well, we have sometimes 20, you know how it goes, sometimes 18, sometimes 13. But most of the time, not less than 13, I think. Maybe once we had 10, I think last week by coincidence. But otherwise, it's about 14, 15. It's like 3 per day, let's say, on average. And some of those are ChemACD, some of those are SWOT. We used to count the statistics a little bit in the sense that we use the full TP as the calculation for R2R, but now we're actually using the average. So the stats are a little bit more accurate in this regard. And well, if you're curious about, this is more for people who are new in here. If you want a little bit more background about us, you can check out, for instance, this FPA, the Forex Peace Army review about us. For those that know us, I guess no need to, but this is more for people that are joining us for the first time. You might want to check that out. I can send that link actually to the chat box there, so you can check that out. Let's take a look at the stats, some of these stats quickly, and the channel itself. So this is how it looks like, all these trades here, right? This is how the stats look like. So this is a summary of this week's trades, for instance, right? Some are open, some are closed. You see we had a good win streak, about 2, 4, 8 wins in a row this week. And you got information about how many pips and what R2R, as you can see. And we keep track of all the stats from October till now for each week here on the right. And I hope you can see this. Yeah, you can. Good. And also month by month. Actually, we grouped 4 weeks together. So you can see our best month, we had 91% wins, but our average is about 70.7. So let's say 70, 71. That is our goal. And here you can see the pips, the reward over that time, and the average per month, 32.5, etc. So that's just to give you an idea. Here you can see the monthly scores. That link is available in the chat of this webinar. If you're looking at the recording, I don't know, we might send us an email and we can send you this link. All right. With regard to this Peace Army, I promised you to send you this. Let me do that right now before I forget, just in case you're new in here. All right. Back to, so I don't want to hold us up too long with this. Some of you are more interested in stats than others. So, but basically, I think that the main idea is clear. What you can expect basically here, you can see about 54, 50, 50 setups, 60, 50, 70 setups in a 4-week time period, right? That's basically what you're looking at. And all right, so let's take a look and continue again with this. Here are some of the live setups actually from this week. I already mentioned the 8-win streak by coincidence this week. One of those trades was the Eurodollar on a 50-minute chart, SWOT system. And here you can see, just to give you an idea, what we sometimes send, NetNet will be 15-minute, 1 hour, sometimes 4-hour. SWOT is typically 4-hour, or nowadays we started with 15. We're actually going to think about expanding into daily charts to send a little bit more longer term trades. That's on our wish list as well. This is a 15-minute example, and the SWOT software is very visual. I'm going to show you more about SWOT and not, I'm going to show you tips and tricks that are not necessarily connected to SWOT. You could just use it as is, by the way, all right? But this particular software is showing you entries very visually with red and blue candles, moving average indicating the trend. So the entry was this very simple red candle with red arrow, and that's just right there, the entry. Stop loss is above the fractal high where the red arrow is. This red arrow right there. We have TPs right there and there based on Wiz, and we also use pivot points to add a confluence of our targeting. And you can see both of those targets were hit. So we had about 60 pips and 30 pips win, which is about 45 pips average. I think the risk was, I think it was about 25 pips. So it's like 45 divided by 25 is like 1.7, 1.8 reward to risk ratio, which is great for a 50-minute chart. And so that's one example. Another example, Euro odd, also SWAT, 4-hour setup, also from this week. No, sorry, no. This is from last week. This week we actually took another one, but you don't see that on this chart somehow. Let's see. Euro odd. It is Euro odd. I probably made this. I'm not. Now I'm confused. 4-hour chart. We'll take a look at live charts. But anyhow, this previous signal was. Yeah, there are actually three entries potentially, right? 2 red candles here with red arrows, 1 red candle a bit later with more confirmation. If I remember correctly, we took 2 of those. One we closed for about 15 pips loss, which was nothing. It's like maybe it was like 10% of the risk or 5% of the original stop loss size. And then the second one went very well, as you can see, for a great move down. And it went right down to the minus 61.8 target. So that was a nice win. And recently we took another one, but we'll take a look at the live charts for that, just to give you an idea about that win. We had half the trade was actually aiming at a TP. The other half was exited on a trail. That sometimes we use as well. So just to give you an idea about this, there's a lot of info here. I know there's a fib retracement tool. They're all kind of moving averages. So, but we'll dive into that a little bit later. So those are 2 examples of live. If you're interested in live, there is a way to get it for free. It's ECS Traders Club program. It's very simple. You can get a discount for our systems or 1 month free of ECS Live. If you're already a member, or if you're from the US, just write us and send us an email at this address right here. If not, if you're not a member already, or if you are not from the US, you can just check out this link right here with more information. All right, so that's the ECS Traders Club program, special discount for you. You can expect extra support. Pretty simple process, I think, but just beware that it's tied to the link that we have. So that's an important step to remember. All right, so with regard to the market patterns I promised you, I tried to keep the first part short, but just wanted to give you a little bit of a background in what's happening with Elite Currency. Now, with regard to market patterns, all right, so SWAT is not only a method, but it's also a trading system, and it's also a software. So the method can be traded with different systems, different ways, but the software focuses on a particular method, a particular subsystem, I should say. So you can trade with that software, or you can trade the method with your own basically candlestick pattern confirmations. All right. With ECS Live, we focus on using the software because it's the simplest. It is the most visual with the red and blue candles. So we focus mostly on that. But the method itself and the ways of trading are wider. All right. And of course, if you join SWAT or Live, we would show you that. SWAT is about price patterns. It's about momentum. And it is about fibs and moving averages. It stands for simple wave analysis in trading, but it's way more than wave analysis. It's really about market structure. It's about the fractal nature of the market, and that is seen by analyzing fibs and moving averages. Wave patterns themselves can be complicated, but we simplify it by focusing on Fibonacci levels and moving averages. And the SWAT software kind of makes a bridge between a complicated wave pattern and a simple analysis. All right, so it's like a simplification, and because wave patterns themselves, if you really are diving into wave analysis in very big detail. It takes a lot of experience. It takes a lot of time to get to a spot that you can successfully use your wave analysis for good trading decisions. That's not easy. You can use wave analysis as a tool for confluence. That's a little bit easier though. But SWOT is kind of a bridge. And that bridge is based on moving averages. So let's talk a little bit about that. But before we dive into some simple tricks, I think, let me check out the chat because I didn't have time for that. I see 2 questions. Let's see. Yes, correct. Markets.com is indeed a broker. No trade. Leverage is up to 300 to 1 leverage available. 300 to 1. I can write that down. It's clear. And the second question is, so when we subscribe to ECS Live, these CAMACD SWOT software will be given to us. Not the CAMACD. You will have access to CAMACD setups from Nennet that he trades himself, and he then shares in the live channel. SWOT software, yes, if you stay member for at least the second month. So after a 1 month period, you have access, or if you subscribe to a 3 or 6 month package, you get it right away. So more or less right away, you will get access to the SWOT software in most cases, or either right away or after 31 days. And the SWOT software is part of Live as well. You have a kind of a rental to that. And you have access as long as you stay a member. Can we incorporate this into any MT4 platform? No, it doesn't have to be this broker. It could be any MT platform. That's really up to you. All right, good questions. So finally, the good stuff. And I know this is what probably many of you are waiting for, so that's good. So 21 EMA and 144 EMA. Now, first of all, why do we use these EMAs? They are Fibonacci sequence levels. I know maybe it's a little bit, it's not that important. Honestly, I think that all moving averages work well. But we found our methodology is built around these moving averages. They work well for us. We know exactly how price responds and moves with these moving averages. So the 21 EMA is for the trend. Very simply, basically, as long as price stays below these 21 EMAs, and the 21 EMA has a good angle, look at this Aussie dollar, for instance, example. It's the same picture on the left and the right, by the way. It's exact same. The difference is that on the left, you just see the candlesticks. On the right, you have the SWOT candles, which show momentum. So when you see red candles, that means there's bearish momentum. Gray is neutral. Blue is indicating, the opposite momentum, bullish momentum. So you can see with this Aussie, a great move to the downside, right? And the 21 EMA is a great tool for that because as long as price stays below that, you have a great trend going on. And if the 21 EMA is below the 144 EMA, you got perfect trend alignment. Why? Because you have price below the 21 EMA, 21 EMA below the 144 EMA, so there's alignment within a strong trend. Now, how about if the EMA is up, bullish, like here at the top of the screen, but it's trapped between 2 long-term moving averages like that? Well, that's an area where you can expect correction. So this is, very useful information. The long-term moving averages, by the way, are 144 we use and 544, all right? So it gets trapped. That's, a phase where you want to be careful. At that point, you can expect a correction and or consolidation or some choppy price action. But you can see how the 21 EMA, and this is not something, we're giving you this info away like for, just free basically. I mean, use it as much as you want. This is all for you to use and see if it helps your trading or not, right? But for us, gives us a great idea about the trend, basically. And one of the reasons why we were still bearish on the Aussie this week, we took an Aussie dollar on Monday short, which ended up for a nice win, maybe a smaller side win, but still good win. And why was it smaller? Because it's kind of like a last push, a fifth wave. But why did we expect downside? Because a lot of traders were, at least I heard from a trader that he was talking to a lot of traders, and he was the only one who was bearish, just like following our advice, basically, or not advice, but following our analysis. And the others were bullish. One of the reasons was because of the simple fact that so many candles were away from the 21 EMA. If you have anything like this, like 20 candles, then the chance that when price goes back to the 21 EMA, like here and here, that it's used as a bouncing spot is very high if there are that many candles that are not at the 21 EMA. So if there are a lot of, if there are candles that are constantly hitting the 21 EMA, like here, then it's not an impulse, it's not a momentum, it's a correction. So there could still be some trades there, but it'll be slower. When price has moved away from the 21 EMA for that long and then moves back to it, it's typically turns into a strong support or resistance spot. In this case, resistance, of course. So that's one of the tricks, that if price stays, and with this 21 EMA band, it's a 21 EMA low and high, by the way. 21 EMA low and high, not close. You can add a close, but it would just be a 21 EMA right in the middle. So you have 3. That's possible too. But basically, this band, so if you have many candles not touching the band, when it goes back to it, there's a strong chance that it will be a reversal. And that's one of the reasons why we took that short on Monday, right? And that's as we get a break below 21 EMA again. That's why we took it. That's why we took the profit as we got a lower low, because we realized that this is probably a wave 5. And I'll tell you more about waves in just a second. All right, let's not focus on that too much. You don't need to know the waves, by the way, at all to trade necessarily, or you don't need it at all. In fact, the fact that this is maybe wave 5, if you don't know that, then you would still just use a fib or use our Wiz tool to see where the Wiz targets are. That's based on fib sequence levels, and you just take profit there. All right, so we got divergence between the bottoms, and was one of the reasons why we also actually took a long on the Aussie, but we took it against the euro, so we shorted the euro odd rather than long the odd USD. But basically the same trade. One of the reasons why we expected upside, actually, and you can see indeed that we did get after the downside, then we finally got that upside. Divergent pattern was one of those things. But the fact that basically our targets got hit, divergence pattern, and let's see, fib sequence levels got hit, expecting a final wave 5, basically. So yes, this is why, and then you got the confirmation as price kind of above this 21 EMA. That could be a counter trend trade for some traders, and that is one we took, as I said already, on the euro odd. So that's basically one trick, let's say. One trick. I call them tricks for lack of a better word, but one tip. Using the 21 EMA for trend, having alignment is the best if 144 EMA is aligned, and the number of candles not hitting the 21 EMA. Next thing is, let me quickly check though. No questions. Good. All right. The HMA. So as you can see, the SWOT part is very much focused on moving averages. It is like our roadmap for analysis. The HMA is one of them as well, and it's the one that indicates momentum. So we have the 21 EMA high and low for trend, 144 EMA as the confirmation, as the long-term kind of trend, but also as a bounce or break spot, because look, often price does respect it. Here you can see in the right lower corner, the euro odd. Oh, that's the setup we took actually here. You see, I took the screenshot yesterday. Today, we got another setup, and it's working well, as you can see. This is one we took live as well. Also, a setup that we sent in the live channel. But anyhow, so 144 EMA here. Look at this right here. You can see the bounce, the break here, the rough kind of bounce as well. So it is also a bounce and break spot, but it's actually also a long-term trend confirmation. The HMA is for momentum. It's really like confirming the fact that price can move away from the 21 EMA, because just because the price is below the 21 EMA doesn't mean that it's going to go away from the 21 EMA. You know what I mean? Well, let me explain it. So for instance, here you see the break below the 21 EMA. HMA is down, so you get a push away from the 21 EMA. Price stalls, makes a retracement to it, but it doesn't move away from it. It kind of stalls, goes sideways. You see that? For a while. Then the MHMA flips back down, and that's when the momentum starts to pick up, and that's where you actually get the push away from the 21 EMA. So the 21 EMA is great for the trend, but it doesn't necessarily indicate when price will start to move, if and when it will move away from the 21 EMA. The HMA is a perfect tool for that because it's very responsive. It's very it just indicates the momentum so accurately. And this is actually the free indicator that anyone who joins this webinar or sees the recording will get from us. So you already know now what the free tool or indicator will be. That's the HMA. And I'll show you at the end of the webinar how to reach out to us, how to do that. So you can see now kind of the pieces of the puzzle kind of maybe being pushed together. It might seem complicated when you see the chart first at the first time because a lot of things are on the chart, but maybe things are falling on their place now. So you understand already the fact. Let's take a look at the euro dollar on the left. All right. So you can see that here HMA pink down, 21 EMA, price below the 21 EMA, 21 EMA below the 144 EMA. Here's the 144 EMA, so it's up in here. So yeah, look at that, boom, with the a bearish momentum fall moving away from the 21 EMA. So that's a great short there, great trade to the downside, right? HMA goes up, so that's a retracement spot. HMA back down, so you get a little bit of a push, right? Not much push, but still. HMA up. Now here you get a move that breaks above the 21 EMA. And we'll explain in our course that that's already a moment, considering the fact that you have divergence patterns. The trend has overextended. If you look at our Wiz tool, it's an area where you know that you can get a consolidation. And that's what happened. Triangle happened. Most importantly, we got a second break above the 21 EMAs, and the HMA is bullish, you see? So this is actually a spot where reversal traders might be lining up to look for an upside breakout. Now, we tend to trade with the trend, but sometimes we do take reversals if there's a lot of good stuff going on. And, the euro dollar could have been one. There's good space between the 21 EMA and the 144. The 144 is the target because when there's divergence present, there's the official target of the divergence is actually a move back to the 144 EMA of the same time frame. This is all stuff we explain in our SWOT method and course. So there is space to the upside. You got price breaking above the 21 EMA for the second time. You got the HMA up, all right? And if we would use our SWOT candles, I think we would have a SWOT candle, blue candle somewhere in here. Anyone waiting for a break above the trend line and a pullback could take an entry about 118.80, target 119.40-ish, and I think, or 119.25 perhaps. But anyhow, 45, 60 pips, boom, reversal trade. Those are difficult, more difficult than with the trend setups, but all of that is possible. Basically, using our SWOT method, you have five ways of trading. You got three systems that are trading with the trend. You're trading actually the wave 1, 3, and 5, but you don't need to know the waves. And the counter trend trades are wave A and C. So five ways and waves. But so let's take a look at the right lower corner. So now these moving averages are making more sense, aren't they? Right? You got the long-term moving average, 144, the very, very long-term moving average, the 544, the 21 EMA showing trend, HMA showing momentum, right? So it's now all getting kind of a purpose. So it looked like a clutter maybe at the beginning. Now you can digest, or maybe not now, maybe it takes a little bit of time, but you can start to digest it and understand what all of this info is telling you. And then you have the candles confirming that up or down or neutral, and the fractals indicating key resistance and support levels. Fractals are good for using as stop losses, knowing when the trend momentum is over, because because when you get a fractal, for instance, here, for instance, at the 144 EMA, that could be indicating that the downside is over. Here, a fractal could indicate that the upside is over, and they're just good for breakouts on lower time frames. Maybe you can, when price breaks through this fractal, for instance, here, it could be indicating a breakout. And stop losses. You can use this fractal to hide the stop loss. So fractals have that purpose. And then we have oscillators at the bottom. Those are more just like for divergence patterns. I have two just to see different views. Don't necessarily need to use that. If you can see divergence without the oscillator, you don't need to. It's just like an extra for divergence patterns. And something else, which I'll tell you at the very end, something that is key for wave patterns. So if you really like waves, hang on to that for that. All right, hang on. Let me just check out if there are any questions. Nothing yet. Good. Moving on. So I already revealed this one. Divergence and moving back to the 144 EMA. So I already told you that one. We can keep it short. But basically, when price has divergence between tops, so here's a top, and sorry, I can't point at it, otherwise the slide arrives. But look at the awesome oscillator at the bottom. When this, there you go. And you will see that the right top on the oscillator is lower, price is higher, but the oscillator is lower, right? That's obviously the divergence. So what can we expect? Divergence doesn't have to happen right away, but the target, especially on the higher time frames, is the 144 EMA, and that's how price eventually goes back to 144 EMA. In this case, it actually goes all the way back to the 544 EMA, but it's not something that has to happen all the time. The fact, it could retrace deeper, like it did now, but the minimum target typically is 144 EMA or close to it. All right, and you can see how, boom, nicely this falls down to that 144 EMA. So that helps with finding reversal trades. This is the pound New Zealand 4-hour chart. Most recent time frame. I mean, most recent, just now, just today. All right, next trick is using our Wiz Tool. Now, Wiz Tool is for free as well if you use our ECS Start package, which you can download from our website. You just go to our main website, elitecurrency.com, scroll down, find our services, and on the right, there's ECS Start, which is free. You can get a lot of good tools and info from that. Wiz is one of them. We have a free version of Wiz and also an upgraded version. You will get the free version, but it works just as well. There's just a few extra features that are quite useful if you use the Wiz Tool regularly. And you can see one tip when using the Wiz Tool is break of the third and fourth level is typically where you get the most momentum. So look at the break of the third level, boom, straight down to the fourth, right? Consolidation, break of the fourth, boom, straight down to the fifth. Break of the fifth, slower, but steady downside to the sixth, right? Between the fifth and sixth, you do get trend continuations, but not typically as quickly as between 3 and 4 and 4 and 5. That also depends on the pair, by the way. The pound pair is actually the same. What I said between 3 and 4 and 4 and 5 is valid between 4 and 5 and 5 and 6. It's a little bit shifted because pound is so volatile. So it's a great tool for letting winners run. It just shows you where you can expect the space and where you can expect correction, or there's like more chance of correction, which is in the first levels and zones where prices typically choppier. And also when it breaks actually into very far levels, like if it breaks into 7th level, that's actually where traders really, really get messed up, because price is already beyond level 7 Wiz, which is like a huge move away in one direction. Price starts to go into massive consolidation. Traders don't know why, because trend, it still looks like it's a trend, but we do know why, because it's beyond what, a Wiz level, and it just needs to retrace, but it doesn't want to retrace. So there's this huge consolidation that happens often when it's just very far Wiz level 7, Wiz level 8 even. So Wiz is key. All right. Excuse me. Next trick is fib targets. So using swing highs, swing lows, and using the -272 target and the -61.8 target. Very, very useful. Look at the dollar CAD. We had a fib from here to here. And this is a trade that Nena took. When I say we, I meant like SWAT was thinking about taking that setup as well. But Nena already did that with the CAMACD. So we didn't we didn't add that same setup with SWAT. But basically, SWAT showed it too. And with his CAMACD had it as well. And the trend is here. This is not a strong trend anymore because the 21 EMA is flat. But because the consolidation zone is going sideways and the 21 EMAs are above the long-term moving averages, and we had momentum to the upside because look at all these blue candles, and eventually here the HMA turned up. Yes, breakout though was very likely to succeed. So that's what happened. You got a swift move up to that -272 target, and that was it. It didn't go any further than that for the moment at least. So using fib targets, that's a good one. And next, the moving averages, how you can piece together the moving averages in the Awesome Oscillator for understanding, I say the waves, but also just price patterns and patterns in general. Yes, I'm checking the questions in the meantime before I continue. Yes, the HMA. Indeed. I'm a big fan. Check it out yourself. Of course, do some testing, demo testing, and see if you like and if it helps your trading. But I really like the momentum side of things for the HMA. All right. So yeah, the extremely useful HMA. Exactly. So Awesome Oscillator is useful for counting the waves. All right. So this is something that many wave traders don't know about, is that it's kind of like a roadmap for wave counting. So it makes it less discretionary and makes it more factual in a way. Because what happens is that when you have, let me show you maybe a better, I think I need to show you the screen and I need to move the chart. It's easier. 1 second. All right. So let me show you. Let me make let me get rid of the Fisher. It's the Awesome Oscillator. All right. Let's see. I'll show you historical, or we can look at, no, let me go back. It's easier. There we go. All right. So typically what happens is you have a wave 1 where the Awesome Oscillator goes above that middle line. All right, but not all too much. And then there's a retracement that goes back to the 0 line. So this is the wave 1, and this is the wave 2. Why is that? Because of the oscillator, right? Here we get the retracement back to the 0 line. Not here, not here. So this is all one push up. From here to here is one push up. This is one wave 1. Now within this wave 1, there could be like mini waves. On the lower time frame, we might see 5. We should probably see 5 waves up within this push up, right? So this is how it all kind of connects. But on this time frame, this is one push up. This is wave 1. Then you get a retracement to the, on the oscillator. So that's wave 2. And then you get a huge push up, right? So this is, here you get a light touch of the middle line, but we could, basically see that then as a wave 4. This is the wave 3. And this is the potential wave 5, all right? So why is this wave 3? Because wave 3 on the oscillator oscillator is always the most powerful one. It's always the strongest. So when you see a very big push on the oscillator, it's probably a wave 3. Then when it goes back to the 0 line, after such a big push, it's the wave 4. And then when you get one more push up, but it creates divergence, that should be the wave 5. So using the oscillator oscillator, you can understand which swings are 1, 2, 3, 4, 5. That's the pattern. And that's how you can use the oscillator oscillator for understanding those wave patterns. Then you get the ABC correction. You get to move back to the 0 line. Then you get an even weaker upside that doesn't necessarily break this top. That's a wave B. That's where a lot of bulls get trapped. And then down it goes for strong oscillator ride for wave C. All right. Now, not every time this oscillator is going to help, because sometimes you get a big correction like this. All right. So this is just a consolidation. You don't see 5 waves. You don't see ABC. It's just an extended correction. But even here, a little bit of divergence will help understand that it is probably correction, but also using the moving averages. So that's one thing, the oscillator oscillator. The moving averages help too, because you can see that price here is below the 21 EMA and the 144. It's because it wasn't a downtrend. As price and the 21 EMA get dragged above the 144, that's when the trend starts. Typically, the wave 3 starts of the wave 1, and you get a very good push up to the upside. So the 21 EMA gets respected here and here. Those are probably internal, like wave 2s and 4s. All right. And the same thing happened here. So you have basically, this is counter trend trading. Difficult, but possible. Here's where you get with the trend setups already. As wave 2 ends and wave 3 starts, as price breaks above the 21 EMA again, and wave 4 bounces again. Then price breaks below the 21 EMA. So this could be a bigger correction as part of the wave 2. Then you get a re-break above the 21 EMA. Let me zoom a little bit in to that part right here. You get a re-break above the 21 EMA. So that could be, actually also price goes back to the 144 EMA, as you can see. Typical, deep wave 2. Breaks above the 21 EMA, could be a wave C or 3. Hooks back again to the 21 EMA, right? And then pushes above it. That could be then that wave 5. The wave A ends at the 21 EMA, choppy push above the 20 EMA, which is typical for wave B. Then the re-break below the 20 EMA and part of the C that goes back to the 144 EMA. So I know that was a bit fast, perhaps, but basically, by using these moving averages, you can understand the waves too. Wave 1, 2, 3, 4, 5. Wave 1, wave 2, wave 3, wave 4, wave 5. Wave A, wave B, wave C, all dancing around that 21 EMA and 144 and eventually 544. This is not necessary. The beauty about it is that you just have to use the moving averages and the SWOT candles to understand how to use it. You don't necessarily need to know the wave patterns to benefit from that. But this is the logic behind it, so at least you know what the logic is behind it, but you don't have to use it actively. If you want to use it actively, then that's fine too. Of course, you can. There's nothing wrong with it. If you're a big fan of wave patterns, wave theory, go ahead. I mean, it will only help, I think, if you use these concepts for your wave analysis. But not everyone is equally fan. Some are totally not a fan. So, but that is, this kind of method still allows you to trade the waves in a way without necessarily having to know the details of all of them. But if you like those details, then that's fine too. I hope you get my point. But if you're a wave fan, equally fine. If not, it's also okay. That's what I'm saying. Some of us love it. Some are neutral. Some are not fans. But this our SWOT methodology using the moving averages and the fibs basically, and oscillators and fractals is trying to capitalize on that in any case. All right, so that's using oscillator and moving averages for the wave. So, oh, I got one question. Let's see. If I sign up for your strategies, what help do I get to understand how to use them? So, with SWAT and with ChemACD, we both have courses basically. So we have you get access to our website, members area of the website, where you will be able to access all of our videos. For SWAT specifically, there are 24 videos. That's the main course, 8 hours worth of material. And then we have follow-up webinars, a half a year of follow-up webinars. We had live webinars, one a week. That is about 26 hours. I know it's a lot. Just start with the basic course. That's about 8 hours. That's enough to move forward. The extra webinars are just kind of like piecing, like going into details that you can decide which detail you want to focus on or not at all. But it's like an extra. We wanted to give some extra value. Then you get also the indicators, of course, and you get also access to the live, so you can see how we implement it as well. Depending on your package, there's, I don't remember exactly. I think you get 1 month of ECS Live for free if you join ECS SWAT. I think it was 1 month. If you join ECS Live, you also get access to SWAT, by the way, but you get a limited. I mean, if you stop with Live, then you don't have access anymore. If you buy SWAT, you have a lifetime access, basically. So it's up to you which one you think is better for you. But that's so you forum, you get access to those videos, you get the indicators, you get lifetime access to our webinars, and up here updates and live for a month. Or you can join live as well. So it's up to you. ChemACD has the same structure, by the way. But I don't remember exactly how many hours it was. And then I did that course, of course. And he has like subsystems and stuff. Yeah, we do with live. We send our trade setups, and those include the entry, the stop loss, and take profit, 1, mostly 2, and we also indicate with SWAT, we also indicate the trail stop loss levels we use. And then we have also 4 webinars a week, 2 Nenet, 2 with myself, and there's a update, 1 extra video update halfway the week. 1 on Monday, 1 on Tuesday, a video on Wednesday or Thursday, and 2 webinars on Friday. Other, of course, option is that you could go with our trusted partner, and that would be another option for you to get it for free 1 month. And that would be another way of doing that. So this is the HMA indicator, and very simple. Actually, just send us an email. And I guess just mention our webinar 10 May. Keep it short. Don't spend too much time. Just say, hi, HMA indicator, please. Saw your webinar or something like that, Last things, if you haven't already, if you're here new, feel free to subscribe to our free analysis. We send, I don't know, anything between like 3 to 6 pieces of analysis per day that are uploaded to our website from Monday to Friday, and sometimes 1 or 2 in the weekend. If you subscribe, you just get an email every day sending the summary of all those, and you can do that on the homepage. So that's the first thing I would recommend. I think that would be useful. Second, feel free to join us. Obviously, that would be great. If you want to give us a try, feel free to do so. I already told you, trusted partner, or just join yourself. And last but not least, if you're interested in joining our team, feel free to send an email as well to that email address, info@elitecurrency.com. So those are things some action points that you might be interested in. And last but not least, here once again some info about our ECS Traders Club. That's how it's called. All right, and here's that link with more info. Definitely recommend it. It's the easiest way, I think, to start. That's the end. The last slide. Let me check if there are any questions. Yeah, basically, it's the same software that you're using now. So you can communicate in the same way, indeed. It's exactly the same, indeed. Only not, there's one video. Obviously, then it's just me talking. But otherwise, indeed. And we have a forum. It's not used that much, unfortunately. Forums are outdated. I don't know. We have to, but there is a forum where you can write and talk to other members and talk to us as well, by the way. So there is that option too, and talking in this live webinar. And of course, you can reach out through our email, obviously. Thank you, Andrew. Great to hear that. The discounts, I don't think there's any expiration necessarily. Not that I know of. I don't think so. Let's see. What are we writing for what are we looking for in writers? Well, at this moment, still English. I mean, if you have ideas about other languages, feel free, I guess. I mean, we're open to ideas. We're quite flexible in this regard. I mean, at this moment, more English, but if you have any ideas, feel free to let us know. So English is useful for the moment. We're looking for people who like to write, who like to explain things and concepts, who like price action, of course, technical analysis, patterns. If you're a big Camarilla fan, for instance, that's a benefit. I mean, if you have the same if you like the same tools, of course, that's a benefit. But we're also looking for simple articles, simple things like explaining what is a trend line or something like that. So you don't have to have years and years of experience necessarily. You could also help us with these beginning articles. And so best is if you tell us what you like, what are you interested in, what style, etc. And maybe if you could give us like an example maybe of something you would like to write about. I don't know, it doesn't have to be long. Maybe like if you could give us one page maybe, or like maybe a page probably. I think is decent, not too long, not too short, to give an idea about your style. And all right, so if anyone's interested, let us know. Yep, great. And that's about it, I guess. Thanks for being here. Thank you. Great to hear that. And we'll be back tomorrow with some more wave analysis. So now you know a little bit more about about some, how we look at the waves at least. Wish you all good trading, and I'll see you very soon, hopefully. All right, cheers.